How exactly does a country measure its overall economic performance? Where does the income originate? And how does the money we spend actually turn into national output? The answer starts with a simple reality. Every single cedi spent by a household on a good or service immediately becomes a cedi of income for a firm or an individual. This circular flow gives economists two distinct mathematical methods to measure our economy. We can measure the top half of the circle by summing up all the incomes earned by factors of production. This is the income approach. Or we can measure the bottom half by adding up all the spending on final goods and services, the expenditure approach. While they observe opposite sides of the exact same transaction, both methods are ultimately calculating the exact same thing, the total economic output of the nation. The income approach sums up all factor incomes earned, adding wages, rents, interest, and profits. To reach a true national metric, weigh just this sum, adding indirect taxes, subtracting subsidies, adding depreciation, and factoring in net factor income from abroad. This table displays a dataset of national statistics. Looking at the categories, we can see exactly how abstract economic concepts translate into real accounting line items. We start calculating gross domestic income, or GDI, by extracting our factor incomes. We map our wages variable to compensation of employees, pulling 26,620 million cedis, and corporate profits to pull 3,050, adding those to rents, interest, and proprietor's income. Once we total GDI, we subtract 4,790 for consumption of fixed capital, yielding net domestic income. To reach our final target, net national income, we add 800 received from investments abroad and subtract 1,300 paid abroad, landing at a final NNI. We make these specific deductions because net national income must represent the true net earnings of the nation's residents. We have to account for the physical wear and tear of our capital and the reality of cross-border income flows. The expenditure approach calculates total spending on final goods and services. Our equation here is GDP equals C plus I plus G plus the quantity X minus M. That is consumption by households, investment by firms, government spending, and net exports. Looking at the bottom table containing our output data, we can calculate our gross domestic and gross national expenditures. We map personal consumption expenditure directly to C and gross domestic private investment to I. Adding our government expenditure and adjusting for net exports and net factor income from abroad, the equation resolves to a gross national expenditure of exactly 43,800 cedis. Now, pause the video. Look closely at the data table, identify the exact adjustment needed for fixed capital, and calculate the net national expenditure for yourself. The correct calculation takes our 43,800 GNE and subtracts the 4,790 for consumption of fixed capital, giving us an NNE of 39,010 cedis. Tracking this aggregate expenditure maps the total demand that ultimately dictates a country's production levels. National income is a highly practical tool. Governments use this exact data to formulate massive economic plans, like the Ghana Shared Growth and Development Agenda, and to accurately assess the standard of living across different regions. International organizations such as the IMF and the World Bank rely on these exact national income metrics to evaluate a country's economic health, determine creditworthiness, and establish eligibility for foreign aid and loans. By analyzing the data sector by sector, policymakers can measure the performance of traditional economic pillars, like the cocoa industry, and allocate resources effectively against emerging markets. Consistent growth in national income correlates directly with job creation and higher employment rates. It also provides the hard numbers the Ghana Revenue Authority needs to design efficient tax policies. And it is that precise tax revenue that funds critical social welfare programs, ensuring the provision of public services like the National Health Insurance Scheme and the free senior high school policy. As you look at this summary cheat sheet of our formulas, ask yourself, how does a rising national income visibly impact development in your own community? By mastering the income and expenditure approaches, you gain the ability to look past raw statistics. You can now calculate the mathematical foundation that reveals the structural health, the policy decisions, and the future trajectory of the entire economy.